Seaborne Shipbrokers. On the panel, we have Stavros Gyftakis, CFO at Seanergy Maritime Holdings. We have Simos Pariaros, who's Chief Administrative Officer, Euroseas and EuroDry. We have Yiannis Kourkoulis, who's Vice President of Best Oasis Limited. And we have Nikolas Triantafyllakis, who is CEO of W Marine. Eva, please.
Thank you, Kevin. Thank you to our lovely panel today. Stavros, I want to start with you. Seanergy went ahead with the tanker spin-off last year and completely avoided Capesize investments throughout the first half of 2023. Question one, is that true, by the way?
Yeah, completely avoided.
Maybe you bought a Cape somewhere and we're not aware of.
Kind of a strong word. I wouldn't say we completely avoided. I mean, we grew our fleet we doubled our fleet through 2021 and 2022.
Okay.
And what we did when we saw that vessel prices are a bit disconnected from earnings, we took a more cautious stance. Having said that, while we were doing that, we did invest on our Capesize vessels in upgrading them and making them more efficient. And at the same time, we took the opportunity to create United, the spin-off company, which was created mainly, to diversify in other shipping sectors. And indeed, the first investment was in the tanker sector. It was quite successful one. We bought four vessels, which we sold within a period of 6 to 12 months after we acquired them. And again, we invested the proceeds in buying more Capes and smaller gearless bulkers like Panamax and Kamsarmaxes.
Okay, so I'll rephrase. You avoided new Capesize investments in the first 6 months of 2023.
Indeed.
Perfect. Okay.
But if you ask me if I'm still bullish, if I'm positive on Capes, I'm very positive. I think that that's okay. the sector to be, basically.
Okay, so that would be my next question. First of all, in hindsight, were you happy with the investments you made? And if you're still bullish, what do you think is different today compared to, let's say, a year ago, specifically for the Capesize segment?
No, we are very happy with the investments we did. Through 2021 and 2022, we bought the majority of the second-hand Capesize tonnage that came out of Japan. Good quality and pretty efficient vessels. And since then, we have invested more money in upgrading the ships. So nothing has really changed. I mean, we went through a period after COVID whereby the supply was tighter due to port inefficiencies. And it was not only COVID related. I mean, you had the Chinese banning the Australian coal, and you had also vessels stranded there. And then from a super inefficient period, you went through a very efficient period whereby you had all these vessels being released. You had port operations being conducted much more efficiently. You have even, the Chinese are these days discharging VLOCs using AI systems. So it was quite a shock for the market after all these inefficiencies going through a very, very efficient vessel turnaround. What we see today, we see that basically the fundamentals on the supply side are very strong. You have close to zero order book. You have more than 3% of the fleet being overaged, over the age of 20. You have very limited yard availability for Capes. It's a very low margin business for yards, so they prefer to construct other type of vessels like gas carriers, containers, and tankers. And also, it doesn't make any economic sense for owners to order new building Capes. You can pay less than 50% of the price of a new building to buy a second-hand vessel, and then the premium that you get on a new building vessel versus the index, it's not double the premium that you get for a second-hand ship. So economically, it doesn't make sense. So supply is very well positioned.
Demand-wise?
Demand-wise, again, there's a big discussion about China. I'm not that pessimistic. I see that Chinese steel production recovering a bit lately. I see very healthy trade flows this year. You have bauxite out of West Africa, which is tightening a bit the Atlantic supply. You have coal as a result of all the disruptions due to the Russia and Ukraine conflict, coal has emerged very strongly, and we don't see that going away anytime soon. So also, I mean, the demand side doesn't look that bad.
Yes. Yeah, go ahead. Mr. Triantafyllakis.
Hello. Hello, everybody. One point to add to what was said, which is interesting on dry bulk, and I aspire very much on what Seanergy is saying, is that running a homogeneous fleet on larger sizes has many advantages because we also run Panamax to post-Panamaxes, and I understand the notion that the larger the fleets, the better the way that you can employ the vessels, the better the dynamics, the better services you can offer to your charterers, so it makes sense. And that I'd like to make as a comment.
Okay, thank you for this. I want to stay with China, and I want to focus a bit on the property sector. Property sector is about 30% of Chinese GDP. So there has been a lot of effort by the Chinese government to support the sector, given its importance. At the same time, there have been, few teeny tiny bits, hopeful signs that we might be eventually getting out of this really bad time for the Chinese property sector. Having said that, even today, new housing starts are 60% decrease compared to the peak they reached in 2020. And I want to ask, I want to bring Simos in the discussion here. So these little signs, these hopeful signs we see, for example, property prices increased 0.05% in September, which is, I believe, negligible. In most cases, doesn't mean anything to many people. But are these signs that will eventually get us, to the recovery, full-on recovery, and of demand for the property sector in China? Or do you think there are some risks down the way that maybe some more optimistic people have slightly underestimated?
Thank you for the question. I wouldn't like to focus on the short-term dynamics of the Chinese economy, which could bring some further demand in the dry bulk sector. I would like to speak a little bit more about the longer-term dynamics, which indeed they are a challenge. We are talking about an economy that seems to be developed today with a declining population, and some people say even overbuilt. Now, having said that, which is certainly a challenge on the longer term demand dynamics of the commodities related to real estate, I would also like to stress the ability of the Chinese authorities to be able to regulate and provide stability in their economy and society. And this is also what I believe they will do going forward, something that will not create any violent moves in demand and big reductions in demand in commodities related to the Chinese real estate. Also, another point I want to stress out, which is something that I don't hear much, but everybody has to see that about 15 years ago, the world built a dry bulk fleet which was meant to build China. About 50% of the dry bulk fleet was built between 2005-6 and 2012. This fleet is approaching scrapping age, and I believe that if the dry bulk markets gets into a more challenging territory, this old and very low quality fleet that was built in greenfield yard, a great percentage of it at least, will be scrapped, and thus provide a very quick rebalancing of the entire dry bulk market, if that is needed, of course, because it might not be needed. Maybe demand will keep on in positive territory, and we don't get into that rebalancing act which I described. But shorter term, which was your question, I think the environment is safe. I don't believe that there are any very big challenges as far as demand is concerned.
Sorry to interrupt. One thing about China, China is in the transition phase. It's becoming a consumer society as opposed to industrial production. And you can see that by the developments and the huge investment that the Chinese have actually made in Southeast Asia. Look at Vietnam, Malaysia, Indonesia, Thailand. They are the new countries that are taking advantage and taking care of the industrial production of China. That's also shown, if you like, in the container trades. Look at the lines between Southeast Asia and the US West Coast as opposed to Shanghai. So the driving, the industrial, if you like, effort has gone south. That's a very interesting point that we can discuss later on about market dynamics. Thank you.
Okay, thank you for this. Since we discussed scrapping a bit, you mentioned it, Simos. Let's bring Yiannis to the conversation here. Your company is a big cash buyer, so you do see trends and how scrapping is evolving during time. I think everyone expected very intense scrapping activity for both dry sectors, container ships and dry bulkers, in 2022 and this year as well. This hasn't happened so far. Give us a bit of flavor regarding scrapping activity and why this hasn't happened. Is it because both markets have been okayish? Is it because both markets, vessels that are overaged have probably been repaired because of the good markets? And you can keep a vessel if it still makes a bit of money and you don't have any loans to repay. What do you think?
Yeah, actually, if you had asked me a year ago, I would be like, all the containers, the overage containers, are going to go for scrap. This didn't happen, so I'm not really sure if you have to listen to my opinion. But in any case, the thing is that according to most of the members of the Ship Recycling Society, cash buyers, yard owners, everyone, about 1,500 vessels are expected to go for demolition in the dry sector until the Hong Kong Convention gets into force, which means until June 2025. If you ask me, I don't expect this to happen. And the reason is that from the last year, what we saw is that many owners have a lot of cash right now. They do not have loans, so they don't really care to scrap their vessel unless they're making a loss. Even if they're making a loss, they keep the vessels for the opportunity of a black swan event that could cause the rates to go up. So what we have seen is that it's very, very difficult for an owner to accept that he has actually to be forced to scrap his vessel. This may take even 6 months of a bad market. So over the next 12, 18 months, I do not see how all these vessels can go for scrap. It doesn't make sense for me. Of course, in case of a very bad market in the dry sector, this will change. But to my opinion, I do not expect that many vessels to go for scrap. So I'm not very optimistic about the dry sector. On the container side, I believe that we are going to see.
You mean you're not optimistic in terms of demolition
yes,
activity?
Of demolition
picking up?
activity, yes. In terms of containers, we expect much more. But for this panel discussion about the dry sector, I do not see many vessels coming for scrap.
Can I
Okay.
add something here? Just
Yeah,
to
go
add
ahead.
something. I'm not sure I agree with you because the decision to scrap a ship today is I'm not sure I fully agree with you because the decision to scrap a ship today is not as difficult it used to be because the cost to maintain a vessel trading is not the same. It's much higher today. And the cost to even keep it idle will be much, much higher. So I'm not sure that
No, I agree. This is why I'm saying that I believe that only if the vessel is making losses, someone will decide to scrap. Even if you make $1,000 over the OPEX and you do not have a loan, then you keep the vessel. This is what we have
always
seen.
been like that. You never scrap a vessel that is not losing money.
Up until a couple of years ago, during COVID times, we saw that even with a very small profit, if the vessel was close to the scrapping age, let's say the dry dock was due in 4 months, they would consider selling for scrap, which we do not see now at all.
Sorry, if I may step in. That's why I'm saying that caves are the biggest opportunity out there. Because this may be true, and the debate the gentlemen are having may be true for smaller ships, whereby you have huge fragmentation in terms of charterers. But for the Capesize sector in particular, where we are working mainly with blue chip names and names who rely on the GHG rating of the vessel, on right ship and what have you, I mean, these vessels that are becoming older and less efficient, they will not have a place in the market. I mean, it's inevitable that they will have to be scrapped, even if you find a niche trade I don't know where, Russia or what have you, where you can be profitable for a couple of months or for a couple of quarters, eventually these ships do not have place in a sector like the Capesize sector.
Okay, a bit of difference in opinions. That's always welcome. I myself thought that there would be a lot of scrapping, and I was wrong. So you're not on your own. I want to bring Mr. Triantafyllakis again in the discussion. Let's say that the scrapping doesn't pick up impressively. Are you worried at all? Because I keep hearing that the order book is very low on the dry bulk side. I am with Stavros on this one. Capes do have a low order book. Other than Capes, you have Kamsarmaxes, Panamaxes, the whole Panamax range, and the whole Supramax range, with quite sizable order books. And in fact, in the case of Panamaxes, which is where you operate, you have the one order book that has actually increased since the beginning of the year, is currently, I think, above 11%. Are you worried about that at all, or is it something that you're not focusing right now on? You think the market will self-adjust when the time comes, and all older vessels will disappear at once?
I think the order book is as high as you might say, but there's a lead time. We're talking of deliveries 25, 26 onwards, and within 2023. So there's a lead time between that, then at this stage, and the next 2 or 3 years. So I don't think we're at a stage where the old ships will be condemned. On the contrary, I think that this protracted discussion and inability of IMO and other parties to actually pinpoint decarbonization, come up with solutions, is ending up as extending the useful life of older ships. That's one of the interesting things. By debating and delaying taking a decision, we're actually prolonging the useful life of the older ships. The second thing about decarbonization, just quickly going back, is that it was a good wake-up call for us because we actually looked into the operation of our ships and we optimized them as we've never done before. So today we run ships much more efficient than we were 4 or 5, 6 years ago. That's also a plus for the economy, for the environment, for everybody. But I would not disregard. I think the order book is there, and we know it's coming. There's going to be a replacement at some point of the existing fleet, but the underlying dynamics are still good, and I don't believe things, old ships would turn obsolete as quickly as people believe.
Is W Marine thinking of differentiating in terms of size? Are there any opportunities ahead that you find interesting, if you want to share them with the rest of
Well,
ship owners?
of course, we have a very homogeneous fleet between Panamax to post-Panamax. So we basically carry coal, grains, iron ore, and bauxite. We operate mainly on the southern hemisphere between Latin America, Africa, Indian Ocean, Southeast Asia. To my humble opinion, the biggest rate of growth or demand for dry bulk will come out of Indian Ocean, Southeast Asia in the years to come. Anything in Gulf between South Africa, Kenya, Mozambique, Middle East, India, all the way down to Malaysia, Indonesia, Thailand. That region would yield the biggest rate of growth. So that has certain characteristics. A number of ports are shallow drafted, have got their own dynamics. There are some wild cards in the region. One of them is Iran. Iran is a country that's been sidestepped for half a century. At some point, it will open up, and infrastructure demand will be enormous. So I think that is where the future. So if you map out the dynamics, then you can understand what type of vessel, more or less, will be much in demand in the future. We can go on if you like, but I don't want to bore everybody with my ideas.
Simo, what is your opinion on Mr. Triantafyllakis' comments? I mean, do you have a specific trade or size in your mind as a good opportunity today?
Well, firstly, I fully agree with Nikolas' view that the growth in demand will come from the regions he described going forward. Size-wise, on the dry bulk sector, I would choose an Ultramax right now. I think it's a size that is mostly exposed to all the growing trades. It is more isolated than any other size to the challenging commodities of iron ore and coal. Although shorter term this might not be the case, but overall there are challenges in these two trades. And the challenges come from China and the decarbonization process worldwide. But if I was to put my money on a dry bulk investment right now, it wouldn't be a ship. It would be a stock listed company. I think there are great companies with great management teams that they trade at a fraction of their true value. So I think there is more value there than the actual asset.
Okay, thank you. Stavro, do you agree with this? There's this general knowledge that during inflation, stocks, share prices fall. At the same time, it's actually avoiding growth stocks, which means stocks that have future potential, and focusing on stocks that are undervalued. Do you think dry bulk shares are undervalued at this time?
Definitely they are. I mean, dry bulk stocks trade at a discount between 10 and 50%, with the smaller market capitalization companies, I mean, having the biggest discounts. And let's not forget that after 10 years of depressed markets, we had 18 months of very good markets in 21 and 22, which gave the opportunity to many companies to deleverage. So this nowadays balance sheets are low risk, break evens are lower. So most of the companies, if the market returns, or at least if it stays at the same level that it is today, speaking about capes, have the opportunity to give double-digit returns in terms of dividends. At the same time, we have seen many companies returning also capital in the form of buybacks. And in Synergy, we have done basically a bit of all. I mean, we have delivered the balance sheet. We have paid out more than 25 million in dividends. We have bought back shares, convertible bonds and warrants for about 40 million. And we're talking about a 120 million capitalization company. And shareholder rewards have been around 65 million. So we have been leading the recent dry bulk rally in terms of performance. Our stock has increased around 20% in the last 2-3 months, and there's much more upside to come.
Yanni, your companies, aside from the cash buying side, you have also invested in assets in the past years. Do you have a view, like your background is a bit different, and maybe you have not lived through different cycles of shipping, but still, as a newcomer, let's say, in the ship owning business, what is it that, let's say, excites you more across the different sizes? We've already had Ultramaxes and Capes, of course. And what about you?
Of course, I mean, we have a mixed fleet of MART tankers and capes. What I would say, I mean, of course, if you're Synergy, you have the relationship, you have the knowledge, you have the expertise, you have everything, you stick with the capes. Why not? I mean, it's very good. For smaller owners that are not that exposed to this specific sector, I think that maybe Ultramaxes are better, or Handys excess 35,000 tons of deadweight, so as to be able to overcome any possibility of a crisis in the short term. But if you ask me if I would invest in which sector I would invest right now in the dry, I would not invest at all. If I had loans, I would just repay my loans to avoid the interest rate, the high interest rates, and just wait for lower prices.
Okay. Let's finish with Mr. Triantafyllakis. You've briefly mentioned before the decarbonization issue. I mean, there across the globe and across the world economy, there are still very red flashing recession signals. Do you think that this will eventually delay the energy transition? And of course, maybe help rewrite the carbonization rules as well for shipping?
I think we need to understand that in the southern hemisphere, especially the Indian Ocean, whether we like it or not, coal is the driving source of energy, and I think will continue to be for a number of years. The world is decoupled. The south has the resources; they have the coal next to them. It's cheap; they'll burn it. That's a known factor. Recession, yes, recession might lead to smaller parcels, which will be a benefit to the handies. There are certain issues that, apart from the recession, like the climate, we observe today substantial restrictions in drafts in the Amazon, in the Orinoco, in the Panama Canal, in Northern Europe. If this phenomenon is persistent, that might lead to a change, and again, in the smaller cargo stems, again as a pickup to the large handies. So it's a very dynamic environment, not negative in a way, but I think the biggest volumes will continue to be on the southern hemisphere. And if you want to put a bet on a type of vessel for the future, I'll go for the new generation of the handies, 42,000 tonners.
because the draft, remember, is one of the dimensions that is extremely difficult to adjust, to adapt. Longer ships, wider beam ships you can play with, but the draft is a killer.
Okay, thank you. So you all have a different, almost opinion. That's great. We have time for one question. No, not from me, from the audience. We don't have time. Okay, maybe in a coffee break then. Thank you. Yeah, quickly. Yeah, thank you.
What I wanted to say is that we tend to forget that the new regulations that are coming in and have certain requirements for the future ships will make transportation cost and the building of of a ship in the future much more expensive than today. So this is something that everybody has to consider, and the market is already pricing that. That's why good quality ships that are going to be able to trade in the future in an environment where the new buildings will be of completely different standards. We have to consider that when we come to take a decision today if a dry bulk investment is expensive or not, because the numbers might show that we are above the average or median levels. But taking into consideration that the future will be much different when dictating the cost of a ship, I think that there are opportunities even at today's asset prices in the dry bulk space.
Okay, thank you very much. Thank you to all of you. Thank you.